The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started.
G'day traders, Stacy Burke from Stacy Burke Trading. Today we're going to do a short video just demonstrating one type of pump and dump template from the playbook that can be identified with some simple criteria. Rinse and repeat. The theme rinse and repeat means just hunting for the same setups on any instrument and then waiting for the market to set up. How does price behave on the day? We can use some simple criteria. There are different types of pump and dumps and dump and pump templates, and we can also use some very basic models to target high probability trade setup opportunities. We talk about 3-day setups, but also 3-session setups. In this particular video, the main thrust will be just behind recognizing a signal the market gives us in hindsight, and then also how does price set up on the day. You might have 2 or 3 instruments that give a signal, but how do they set up on the day? Which one is the best opportunity? And we'll just demonstrate that the same setups can show up on any instrument. Simple, reproducible, and scalable in size. Now this PDF will be in the pump and dump section of the course. There's multiple examples in here, but we'll just go through one of each different type of currency or instrument to demonstrate some simple criteria. We're looking at a market that has closed in breakout, obviously giving us a lower low on the day. The pump, the consolidation, London session traders got the first opportunity for the easy dump trade, a pump back up with a new lower low into the US window for the parabolic collapse. So the close and breakout is just a signal that traders can use to find instruments. This is just one signal that the market can give us to alert us to a potential opportunity. A pump and dump, a market that closed in breakout, pumping up, consolidating, dumping down, making a new lower low in the London session, pumping up into our US window for the low-hanging fruit continuation trade. Repeating that the low-hanging fruit is the trend continuation trade, page 96 in the playbook. Another example on the euro market that closed in breakout, making a lower low, consolidating and pumping up into our US window. Obviously major red news on the calendar, but the consolidation at the high of day level and the parabolic collapse, the dump on the backside of the trade. This is an example on the Aussie dollar where often traders may look for the signal and they'll say, oh, it didn't play out, but they miss the next day, the parabolic collapse. So we've got a market that closed in breakout, pumping up and consolidating into the close, the Asian session being the catalyst for the continuation of that parabolic collapse, the pump and dump. Market that closed in breakout, Aussie dollar again, a lower low, a pump up, the consolidation into our US window, and the parabolic collapse back through the low of the day. An example of where the market doesn't follow through to the low of the day, but it's trading into the peak formation through the low of the current day, but an easy parabolic reversal opportunity in the US window. The Canadian dollar, again, market that closed in breakout, traded lower, making a lower low in the Asian window before pumping back up into our London session and consolidating at closing price for the continuation low-hanging fruit trade in the US session. Another example of an Asian session pair, the US yen, market that closed in breakout, pumping up, consolidating, and trading sideways into the close of the day. This is a recent example, and then the parabolic collapse in the Asian window. A pump and dump over the larger 3 days. US session putting in the low and the high of the box, and market pumping up and reversing and consolidating. Paul Tudor Jones, think of your entry point as last night's closing price for the parabolic collapse, a 3-day setup. This is another recent example. Market on the Aussie yen, another pair that closed in breakout, lower low, the low of the month, the new month, pumping back up before reversing into the US window and collapsing back down into the low of month level. An example of where taking the money once that level is broken, or moving our trailing stop down low in case that market reverses. We want to be able to lock in the maximum amount out of a winning trade as possible. Crypto, no different, a market that closed in breakout, pumping back up into our lower US session highs, broke down, giving us a high of day level before pumping back up and breaking down, pumping back up, making lower lows, pumping back up and moving later in the session, but an opportunity still, same type of template. Trader may have been stopped out at break even, but an opportunity to stick with the original game plan for the parabolic collapse. Now, some traders may have just took a position, put their stop in at the high of day, at the extreme, walked away, left that market with a measured move target. So your risk is still the same on the trade, but rather than getting too aggressive with your stop and getting stopped out, having a thesis, your risk is still the same of the original trade entry, putting in a measured move target, or coming back with an alert that if a level is broken, you can follow that trade and lock in the maximum amount possible out of a winning opportunity. The Euro Canadian, a first red day signal, a market that closed in breakout, making lower lows at the open before pumping back up into lower level US session peak formations, breaking down in the London session and consolidating into the open of the US window for the parabolic collapse. Again, an example of where when a market goes into consolidation at an extreme, to get aggressive if you're not already out of the trade, but aggressive at locking in profits in case that market reverses. The Euro Australian is an example of a pair that can potentially move in the Asian window. Market closed in breakout, first red day signal again, pumping into our lower peak formation highs made in the US window heading into consolidation, and the engulfment into our Asian window for the collapse, a measured move collapse, a continuation trade, low-hanging fruit in the Asian window, the pump and dump. Sometimes the opportunity will come in the London window. We have an unusual opportunity here, a large pump in the US window, but a market that closed in breakout, consolidating in the upper level, creating a neckline for trap volume and breaking down at the open of our Europe session, consolidating into the London open for the parabolic reversal trade, a larger pump and dump over 3 sessions. Example on gold, lower lows and a close in breakout, pumping back up into our lower peak formation highs in the Asian window before breaking down, making a lower low on the day itself, and pumping up in our Europe open. London parabolic collapse, again a lower low in the London session, pumping up into our US session open window for the low-hanging fruit continuation trade back to the low of day level. Another example on gold, a market that closed in breakout, lower lows, pumping up a gap on the open, and then breaking down lower lows on the day itself and pumping back up into our high of day level, which you'll notice is the breakout low of day from the previous day. Consolidating underneath our micro M structure, breaking down major red news, a consolidation at the low of current day level, and the coil for the explosive continuation trade in the dump on the backside of the trade. West Texas Oil, a market that closed in breakout, lower lows on the day, moving lower in the Asian session before beginning the pump back up into our peak formation highs made in the US window, a violent explosive move, pumping up and breaking down, one more pump up into our window before breaking down at the end of our 12 candle window. So again, an example of being patient but not changing your thesis. So if traders got into this market or got stopped out at break even, still having the understanding to stick with the overlying thesis of the larger pump and dump trade. This is just one example, lower lows, close and breakout, but how does price behave on the day? Pump and dump opportunities. Now, there are going to be different variations, but this is just one type of signal that traders can look for an instrument, and then how does price set up on the day? Rinse and repeat. Keep it simple, and may the markets go with you.